So this week has been a complete disaster for the small cap and the mid cap stocks, and investors are in a state of panic because their portfolio has dropped drastically in this week. So in this video I'm going to give you the clarity where the small cap and mid cap stocks could stop falling, where the index could take a break, and where is the good place to add more units of the small cap and mid cap stocks that you are holding. So make sure to watch this video till the end. This is going to be very informative. Hello everyone and welcome back to another video of Financial Impulse. So this is the Nifty Small Cap 50 chart. Okay, so this is the weekly time frame, and first of all let me highlight few things. You can see the stock actually started a big rally here in April 2023. So this is a massive rally. So first thing that we are going to do is we are going to measure this big move. So I'll measure from this low point to this high point, and you can see this is 93.27% in 315 days, which is less than 1 year. And let me remind you that this is not an individual stock I am talking about, this is the entire index. So the entire index has gone up by 93%. Can you imagine that? So that's a very big move. So definitely it deserves a correction. There is nothing new about it. This process continues in the stock market. Okay, so now the question is, after this big rally, it has now started falling. The question is where it is going to stop. Okay, and you can see today is March 13th, Wednesday, and you can see this big weekly red candle already, and we have 2 more days left in this week. Okay, so the question is where it could stop falling. In order to know that, first of all I am going to use the fib retracement tool to draw some important levels. Okay, so what I am going to do is I am going to take this as the high and this as the low. Okay, and as soon as I do that, you can see this 0.5 line is nicely aligning with this resistance level. Okay, you can see a head and shoulder kind of formation here, and after that the index crashed, went down. Okay, it formed a base here, and from here it started a very big rally of 93%, almost 100% you can say. So if I do this, you can see that the stock is actually faced some resistance at this level, which is the resistance level earlier it used to face. Okay, and from there it started going up. Now what I'm going to do is I'm going to go to the daily time frame to see the same price action. Okay, and in the daily time frame also I can see that the stock is actually faced resistance here, and then broke this level and then continued its way upward, and now it has started falling. So what I can do is I can draw another fib retracement level by taking this level as the base. So let me redraw it. Okay, I'm moving the zero level to this place. Okay, and deleting this line. Okay, so because you can see that we also have one more base in the daily time frame here. Okay, which is acting as the 0 line, and the high is obviously this one, which is the 1 line. And as soon as I do that, you can see the stock has actually touched the 0.5 level here. Okay, this is the daily time frame, and you can see as soon as it has come to this level, it is slowly starting to get little bit of support, but this is very small. Okay, does not mean that it will take a turnaround from here. No, I'm saying that it is slightly getting support at this level. Okay, so we know that once a stock starts falling from the top, it gets some support either at 0.618 level or the 0.5 level, depending on the strength of the initial rally. Okay, and now we are seeing that the stock is actually getting little bit of support here in the 0.5 level. Okay, so let's also check what other factors are aligning with this level and if this could act as a support or not. So you can see earlier also this level has acted as a support here. Okay, you see when the stock came to this level with this big red candle, okay, then another green candle immediately was formed and the rally started here. Okay, and same we are getting to see here, little bit of support here. And let's also check about the moving averages. Let's check 50 days moving average, and you can see the 50 days moving average has also confirmed that the short term downtrend has started for the small caps. Okay, and it has turned downwards. Okay, so now let us check the 200 days moving average as well. Okay, we'll check the 200 days moving average. Let me delete this drawing and I'll enable the 200 days moving average here. Okay, so you can see the 200 days moving average is also coming closer to the 0.5 level. So what I expect the price to do is tomorrow it might give a green candle. Okay, it might. Okay, there is no guarantee of it. It might give because it is near the 0.5 level. Okay, and I'm talking about the short term. Okay, it does not mean that from here the small cap will start bouncing and start going upward. No, it is not going to happen because the downtrend has started. It will last for a while. Okay, so tomorrow it could get little bit of support here. Okay, like this, the price action could do the like this, and then again start going down, and it might also breach the 0.5 level in coming days. Okay, by that time the 200 days moving average would have come to this level. Okay, and from here it could start a fresh rally. It could start. Okay, there's no guarantee, but this is what could happen. Okay, we have to check tomorrow's price action in order to confirm that if this is a possible scenario or not. But for now, what I can say is this 0.5 level could act as a support. This is what it seems like, and again that does not mean that it is not going to go down even further. It will go down even further because you can already see that it has given a big 93% rally in a very short amount of time, in less than 1 year, and that is the index, not an individual stock. So definitely a correction was needed, and that is what is going on. But wise investors need not panic at this situation. Okay, now the question is, what about the mid cap? So let me open one mid cap chart as well, and then I will give you a final conclusion. Okay, so this is the Nifty mid cap 100, and I have drawn this level here, and also I can adjust the fib levels here as well. Okay, if I use as this as the 0 level, you can see that the stock is again getting little bit of support here. It is also at the 0.5 level, and here you can see small green candles has started appearing in 1 hour time frame. Okay, but there is more downtrend definitely coming. You cannot avoid that. It is definitely coming. So the question is, should you make a fresh entry at this point? I would say no, you should not make an fresh entry at this point. But if you are holding stocks in small cap and mid cap categories, and you are in a negative situation, minus 10%, 15% is your stock, okay, stock return as of now, you can add more units, not a problem. But this is not an ideal time for fresh investment. Okay, now the question is, was all the analysis that you have done and all the stocks that you made entry at the breakout, all those things were wrong or right? Well, I would say if you consider them wrong, then you will avoid the good part of the market, the rallies. Okay, we did our perfect analysis. We the stocks that we are discussing and we are holding are fundamentally strong, that we know. I have always done the fundamental analysis of the stocks that I am recommending in this channel. Okay, the fundamentals are strong. The reason why the market is falling is because of the negative sentiments. There is nothing wrong with the individual stock at all. We know that those are growing companies, those are emerging companies, those are futuristic companies, and they have given breakout. But as the sentiments are negative and the entire index is falling, definitely they will fall. We cannot avoid that. But if you keep avoiding and keep fearing this situation, will also miss the good part, and you will be stuck with just 20, 30, 50% of return from the market. That is not what we are looking for. We are always looking for multi-baggers, and also for the to be on the safer side, ETFs are also recommended. Small cap, mid caps, definitely invest in that, because they will actually provide some support, some cushion to your portfolio when the market is actually falling, because the individual stocks will fall 7%, 8%, 9%. At that time the index will fall 2%, 3%. Little bit of support it will provide to your portfolio, so that the entire portfolio does not go down by a huge number. Okay, so that is all about today's video. The key point that I wanted to highlight is that no need to panic in these market situations. The stocks, if that you have invested, if they are fundamentally strong and you have followed the rules, you have invested at the time of breakout, then there is nothing to fear, even if your portfolio is in negative, because you have conviction on your own analysis. And the stock market obviously is a risky thing, but the only thing that we can do to minimize risk is to do proper analysis. Okay, and that is all about this video. Again, just wanted to repeat, do not panic, stay calm and see where the stocks are actually getting support, and once they get support you can add more units. But fresh entry I am not recommending, not in ETFs, not in individual stocks as of now. I will obviously post more videos once the market stabilizes at any particular level and there is a signs that an uptrend is starting. Then I will definitely make more videos and we will make lots of profits in the market together. Thank you for watching. I'll meet you in the next one. Bye. Take care.